Welcome back to Stocklabs for another market recap. We just finished up the, third week of June. So we had option expiration June 17th, Friday. And it was kind of a pretty bad week for the markets overall. I mean, coming in, was kind of thinking that the week would start soft but would rally by the end. That was sort of playing out a bit, but by Friday or by Thursday, we had dumped the whole rally back out, and Friday kind of was just choppy. There wasn't anything going on Friday overall. So yeah, let's see for our major indices. Actually, we were kind of lucky that Friday just chopped along because it could have gotten even worse than it was. We had the Qs down 4.75%, Dow down the same, and S&P down almost 6%, and the Russell was destroyed minus 7%. I think it had one. I think one day it was down over 5% in a single day. So you sort of see. I mean, if you can call this outperformance, the Qs didn't lead to the downside this week, even though they were still off 5%. This was mainly led by the Russell, which, there's more economically sensitive stuff in that group. And with the Fed sort of doing these aggressive rate hikes now to quell inflation, the thinking is that the economy is going to suffer, due to that. It's kind of a catch-22 thing. Our mega cap leadership stocks, not a great week for them either. Although, I mean, they were overall kind of slightly better than the Nasdaq, if you can say that. Tesla, the underperformer, down 6.7%. Microsoft, quote unquote, held up, down 2%. But I mean, still, Apple has gotten really, this was what, 170 few weeks ago. So yeah, I mean, there's kind of just, it's not so much heavy liquidation, but you're not seeing any buyers stepping in at any of these levels. It's like, investors are not confident enough to be putting money to work right here. So, this sort of choppy environment can take a while to play out, but, we'll just have to see if something changes in the meantime. We jump over into industries for the week to check on breadth. You can see breadth pretty poor the entire way. Basic materials led to the downside. So this basic materials trade looks like it's sort of starting to unwind. I mean, it had the monster run, not just this year, but going back even 2021. Crude prices have not dropped dramatically, but they're no longer just marching higher every day. So, if the investors are going to start pricing in more recession risk, material stocks are not going to do, they're not going to do well in a recession. And the rest of the board, utilities down 9%. That's kind of surprising too, but all of these down. These are big drops on a median basis. So even though the indices were down, 4, 5, 6%, depending on which exact one you were looking at, but you see all these sort of sectors on the median stock is down even more than what, the indices were. So the breadth was really poor overall for the market this week. Once again, we don't have a single sector that was positive on the on a median basis, which is just, I mean, it's nasty. And then on the downside, we've got, let's see, 25, 50, 75, 100, 125. Okay, so this is 150, 143 sectors down 5%. I mean, that's pretty bad. Now, it was option expiration week, so we'd expect like higher volatility, but generally by the end of the week, that volatility tends to quote unquote sort of pair off. Buyers and sellers find a little more of a balance than the sell side just dominating everything. So, yeah, bad week for indices, bad week on a breadth basis by sector. I mean, we can check the breadth by market cap, but when it's that bad by sector, usually you're not going to see much difference by cap. So down 6.5%, 1 to 5 billion, 5 to 10 billion, down 7%. So you can see that's like in line with the Russell. Down 6.4% for large caps, mega caps, down 6%. So everything's 6-7% here for the most part. Terra caps down 5.2%. So yeah, breadth. You don't have if you're a bull, you don't have a leg to stand on with the breadth. Breadth being sort of supportive of anything. I mean, it's kind of just being liquidated. I mean, you could say it's so bad it's good, but that's kind of just making stuff up, to suit whatever you want to say. Before I check intelligence, we did have, I remember I froze the screen from last week. And let's just check how these did. Probably not great due to the just overall terrible week the market had. Yeah. So basically, these were all the stocks that these are all the tickers intelligence was saying was bullish for the week. The Russell fell apart. The semiconductors fell apart. Energy trade, like we said, was the worst performer, with the material stocks. Short China, I mean, plus 2% is nothing. It's not helping anything when all of these were so bad. So, okay. Intelligence picks, not great from last week. And let me get rid of this so it's not here anymore. So let's jump back into intelligence to see what for this week. So less tickers than last week already, but okay, miners for a bounce, short mid caps, Mexico. This ETF pops up on here every now and then, but I'm not sure anyone trades it. Industrials, and I think this is a slightly different ETF than say USO, for instance. I think just in the way that the underlying securities within it are structured. But okay, so crude oil, we'll just leave it at that. And then on the downside, ultra short natural gas rated bearish, so bullish natural gas, and the bullish version of cold is boil. So that would be the bull natty gas ETF. But yeah, not anything showing up on here really. So pretty light week for intelligence. We were looking really close for an oversold signal, but look at this. You can see all week it was like we were hugging this line, almost oversold, just a couple ticks away from it. But never quite got there. So usually what you see is there's no big reversal from here. You're going to end up making the actual oversold. So what the market has to do to accomplish that, we don't know. I was sort of hoping for early in the week to actually get one of these oversold signals, and that would maybe clarify that we were starting to, we were seeing some sort of actual capitulation. But, I can show from, you can see we've had, this was doing that, started doing this in January a little bit. We're really close to oversold, like a handful of times, never quite got there, and then actually slid into it at one point. And you can see sort of the same thing. These times where you're sort of just hovering above this line, even if you get some sort of bounce, you do end up making the actual oversold. So we'll see what happens here with this. But for my money, I would think that there's actually going to be a drop to lock this in at some point. Hard to say when exactly that will be, but it's kind of better to wait for that than just guess at a chopping market that can take you out of whatever positions you have before what you're hoping to happen actually happens. So trying to think. I think that's basically it. I mean, it wasn't a great week for markets. I mean, we're now down. I think this is the third straight week after we had one up week, and then the rest of the weeks, mainly for this year, have been down. So I think we're something like either 10 out of 11 or 11 out of 12 down weeks in the market. So a big washout so far, but really not so much of an acceleration to the downside where you could say that there's an actual capitulation. It's kind of just portfolio deleveraging. There was some rotations to materials earlier in the year, but that seems to be sort of unwinding itself now too. So the market is kind of in a really indecisive mode, and I mean it's tough to work through, but we're trying. So that's basically it. Happy Father's Day to everyone that celebrates that today. Also, happy Juneteenth. So, whichever one of those you're celebrating and or both, have fun with that. Market is closed on Monday, so we'll get a shortened week starting Tuesday and see what we got. All right. Talk to you all later. Bye.